Hey,
Guys, so welcome. Thanks, Brad, for coming on and providing people with some value. I know your time is very valuable, so we appreciate you coming out here and sharing some golden nuggets with us.
I'm happy to be here. It's good to be with you, Adrian, and everybody tuning in, whether you're on Zoom, Instagram, or Facebook Live.
There you go. All right, guys. Well, we'll go ahead and get started. So, I first, Brad, I don't know if you remember, but I saw one of your events in San Antonio. I can't remember the name of it, but it was a conference, and you were speaking about apartment investing. And at the time, I was in single family. I got started in real estate in 2014, single family, flipping houses, and that's all I knew. And so, 2014. I go to your event. I go to a real estate event, and I see you in there talking about apartments, and it kind of really flew over my head because I couldn't come to the realization of how to buy $1 million buildings at that time. It was just there was no way. I had no idea. But then I saw you, and there was probably 30 or 40 people in that room in 2014. And I mean, now your events fill up with thousands of people there. Your background is probably one of your events, and you've definitely grown a lot since. And but then I kept doing my single family thing, and until my business partner Mauricio, he actually introduced me to you and more of your courses and your trainings. And so he ended up pulling the trigger on a course, and we ended up masterminding that course together. And I learned about underwriting. I learned about analyzing the deal, raising money, syndications. How you don't necessarily need to be the only money partner. How you don't need to be a multi-millionaire to buy apartment buildings, but you need to be able to partner with people who are in different positions that you need to do the deal. And so I quickly realized that, I need to learn more about this. And so I ended up attending one of your rat race to retirement events. And that you're actually having an event at the end of this month, April 26th through 28th. And we'll be talking a little bit more about that rat race to retirement event towards the end of this video. But I attended that event. And I mean, my eyes just, I just opened up a whole nother realm of real estate. I mean, I wanted to live life on my own terms. I wanted to live, a life with freedom, options. I want to, build wealth. I wanted to, also save in taxes, right? Because apartment buildings help you save a lot of money in taxes. And so I ended up, going to every single one of your events from that day on. I think it was in 2016, 2017 when I went to your R2R. And ever since then, I went to every single one of your events. And people in those rooms, guys, I mean, you want to make sure you're putting yourselves in the right rooms with the right people. And the people in those rooms, they were doing hundreds of unit deals, 200 unit deals. They were buying portfolios. They were retiring in a couple years. They were millionaires. And so I started really wanting to surround myself more. I think I remember I went to one of your AIM NatCon events on my birthday. So I sacrificed, going to, my birthday parties here at home to just go to your event. I think that was when Grant Cardone went to the AIM NatCon. And so ever since then, I was surrounded by all your group of, students, super amazing people. And then I went all in. I went all in on apartment buildings. My first deal was a 16 unit that I bought. I raised a couple 100,000, and it was a very huge success for us. And then fast forward, we bought a 32 unit, we bought an 88 unit, and now currently we control over 1,400 units across McAllen and San Antonio. We're vertically integrated, all through some of the
That's
stuff you've taught
that's
us.
that's incredible, by the way. Congratulations.
Yeah, thanks, Brad. Thanks.
Yeah.
And so I saw your growth too, right? There's a lot of people teaching the business. There's a lot of people who claim they're really good at apartment investing, but they might not be backing it up with the rooms that they're surrounding themselves in. And so I saw that you were partnering with Tony Robbins. You're part of his Lions group. My business partner is a Platt as well. And I mean, guys, you guys really need to be paying hundreds of thousands of dollars to be part of these groups. And so when you, Brad, when you started joining these programs, and then I saw you, join Grant Cardone's personal mastermind. And then I saw that you were, using Tom Wheelwright to, do your taxes and to bring him onto your events. I mean, Tom Wheelwright is Robert Kiyosaki's right-hand accountant man. So, guys, you want to follow people who are going where you want to be going. And, if you want to be good at golf, you study Tiger Woods, right? If you want to be good at basketball, you study Michael Jordan. And so I went all in on his program. Brad has a mastermind, an exclusive mastermind, one of his highest level programs that, cost some money to join, right? And it wasn't a very easy decision for me to join his mastermind program. But, after just contemplating and seeing other people who are in that mastermind, I pulled the trigger. It was above my budget, but I pulled the trigger. I said, I'm gonna figure it out. And, sure enough, we were raising for a 200 unit deal at the time when I was in your program. And within 30 days, I raised over $4 million to buy this deal through your program, through your mastermind, through people in the mastermind. And so that was a huge success. And so, I do credit a lot of my success to your program, your education, what you teach, and the people in your community, Brad. So thank you for putting it all together and all the sacrifice, that you do to make this happen for other people.
Well,
And
hey,
so,
you're
yeah, go ahead.
welcome. And I just want to comment on that. Like
Yeah.
what you've done is number one, you should be really proud of what you've done. In terms of like, the apartments that you have, acquired and that you control, the capital you've raised. But I would say even more so, and this is really important, even more so is getting out of your head, like the difference between like, hey, it cost money to be part of the Sumrok program. And you almost probably didn't do it because you said it's out of your budget. Well, look, who has a budget? Like, I don't sit there every year and say, hey, here's my budget for seminars and education and masterminds. But if right before this call today on Saturday, and I'm not going to say what it is or who it was with, but I hopped on a call with a guy that I think he might be able to add some value to me and my company. And if I work with him, it's going to be like $70K. I don't have a budget for $70K, but if I could get an ROI of $350K by investing $70K, that's a 5X. Right?
Yeah.
So like, I want to congratulate you not only for the number of apartments that you control and the number of money that you raised, but a couple things. One is you were already doing real estate and you were doing single family. So to make that pivot from something that was you were probably doing okay. You weren't just sitting around, at a job dreaming about being a real estate investor. You were already a real estate investor and you were probably doing okay, but you saw a better path and you jumped on it, which makes you unique. The thing is, people think, well, I don't have the skills. It's not the skills that makes us unique. It's the actions, it's the beliefs, it's getting over your skepticism. And so you did it a few times. You moved from single family to multifamily, and then you invested in a program, and now you deserve, all the benefits because you've made those decisions and those pivots and those investments.
Yeah, yeah. And I mean, there was a lot of, as you mentioned, there's multiple pivots that happened in my career, and there's going to be more, right? And there's going to be times that, you continue to put yourself in uncomfortable situations, but that's really how you grow. And I think if you put yourself in the right rooms, again, with the right people, it'll be easier to make these pivots. And
Yeah.
so, and especially when you're also growing, you're growing and you're, being a leader through that entire program. So I give it to you, Brad, as well. Thanks a lot for everything you do. And then, fast forward, you won National Apartment Owner of the Year in 2012. Is that right?
Yeah. And yeah, so the National Apartment Association, every year they give out an award to one property owner that has 200 or more units. Maybe it's 100 or more units, and then one that has under 100 units. So 2012, I won the Owner of the Year award on a 212 unit property that I had in Arlington, Texas, which is, right in the DFW area, the home of the Dallas Cowboys, in fact. And let me explain why we got the award. I mean, number one, me and the investors, we made a lot of money, but that's not why we got the award. And in fact, it had very little to do with it. Now, that being said, to get an award, it has to actually be a profitable deal for the investors. But there's lots of profitable deals. The reason we got the award is because the unsafe and unclean and not a very nice place to live. And we transformed it into a place that people were proud to call home. And we had so many, call it like reviews or testimonials from the residents, unsolicited, that we were able to submit to the NAA. And then the community, that the surrounding area, like the property used to be like the like people in the community tried to avoid the property, right? And within a 2-year period, the property itself became like a property in good standing, like a good neighbor, like the police didn't have to go there as often. And when they did, there wasn't much happening for them to do. Whereas before, and I remember talking to the officer on duty, because one of the things I teach and my students do, Adrian, as you know, is like, unlike the REITs of the world, like our students actually visit the properties. They know the community managers, they sometimes participate in the Easter egg hunts and stuff like that on the property. I'm not saying they do it all the time, but like we're much more intimate with our properties and how we run them. And so, yes, we're doing it to become financially free. That's what brings us in, but we're also doing it to uplift these communities. And that's why we won the award.
Correct. Yeah. And I mean, we focus on value add real estate, right? So, that's where that comes in, is, being intimate with the residents. Sometimes these properties, I've bought properties where, there's a lot of crime going on. There's, unorganization. There's just people who shouldn't even be living in the community that, feel unsafe. Maybe the lighting sucks. Maybe, the pools aren't working. So, we go in there and we fix all these things. And not only does that improve our lifestyle, but that improves the lifestyle of the residents. And we do see those transformations, and that's how we make money in the business. And then, fast forward as well, you've helped other people do this, a lot of other people. And over 20 years that you've been doing it, you've helped students, close on over billions with a B amount of real estate, a lot of real estate, hundreds and hundreds of units across the nation. You've helped students acquire them, and really help them set themselves up for success. So billions of real estate has been bought through your program, through your students. And then as well, you donate to charity. You donate to, was it the Wheelchair Foundation that, we were a part of in Putamita. I was, super blessed to be a part of that. We gave away hundreds of wheelchairs to people in need. And I mean, it's $100 goes such a long way. And so you also give back to the community. Not only do you do deals, not only do you help others do deals, you also help give back to the community. And so I applaud you for that, Brad. And that's why I follow you. That's why I pay what I pay to be a part of your program and to continue going to your events. So thanks for leading, the way and leading by example. And so guys, we mentioned on this Zoom, the topic of today was going to be to basically your apartment framework on what it takes to understand the deal, find the deal, fund the deal, and close the deal. And this is something you go into detail in your events, and we'll be talking about one of your events coming up soon. But Brad, can you share with us, a few things that people should, pay attention to and to learn on what it takes to do the deal, and basically your framework to have success in multifamily investing?
Yeah, I'm happy to. And let's talk about what a framework is first. Okay. So, a framework, you might also have heard the term blueprint, or a system. Okay. And it's important to follow a system or a framework. And before I had a framework for apartment investing, I was taught a framework by my parents on how to be successful. And let me share with you what that was. It was study hard, get good grades, go to college, get a job, save your money, live below your means, work for a company for 50 years, retire at age 65 or 70 and then pray that you die before you run out of money. And if you think about it, that is a system. It's a framework. And it used to work. Okay. Like, it worked for my dad, except my dad didn't get a college degree, but he worked for the same company for 47 years. But what occurred to me is that, I grew up in a family where money was scarce and my parents fought about money. And so they impressed upon me from an early age to have a better life than they had. I needed to go to college and get a degree. So that, Adrian, is the framework that I bought into. Like, other people might have a different framework. Some people was like, well, join the army and have them pay for your college. That's a framework. For me, it was go to college, study hard, get good grades, save your money, get a job with a big company. And the thing is, I did that. I did everything right. I got one degree. I got a second degree. I worked for 5 companies in 17 years. I made 6 figures and I did everything right, but it didn't work. I lost my job not one time, but 2 times. I was in my early 30s and I found myself very insecure financially. I found myself not where I want to be financially. And so that's what got me into real estate. And the way I started was by going to seminars and joining, investor groups like the ones that I do now. I do seminars and have investor clubs and masterminds and mentorship programs. And that's why I created them, because, after I became a successful apartment investor and retired from my job, I wanted to share with other people how I was able to do it. And so when I share with people how I do it, it's a framework, it's a system. And so we're not just guessing. Like, having a framework means that you have a recipe for how do you approach the business. And so the first part of my framework for investing in apartments, and this applies to whether it's like a 4-unit, a 40-unit, or a 400-unit. Okay, is number one, you got to understand the fundamentals. So I call it understand the deal. It's like, understand what you're doing before you invest in it. And so what does it mean to understand the deal? It means that, you want to understand like the terminology, like what is a cap rate? What is NOI? How do you calculate NOI, which is net operating income? What are the components of it? What's the business model? The business model is to move up the net income, which we do by increasing occupancy and increasing rents and by managing and optimizing expenses. So I teach all that. Like, I teach to understand the business model, the terminology. Like, if somebody today, Adrian, gave you an apartment projection and asked you if you wanted to invest, you would have confidence in looking at that 47-page offering document, right?
Right.
Because you understand the deal, because you invested in your own education. And so one of the things that I teach, number one, is understand it. So once you understand it, now you could be prepared to invest in it.
Correct.
And so you shouldn't invest in it before you understand it. So step one is understand the deal. Step two, any questions about that? And could I move to step two?
Yeah, no, I mean, I think that's so there's a lot of people that, I guess are investing in the deal, I guess, that don't really understand it fully. I think I want to, talk about how you're not going to know it all, so don't, I guess, take it too far in what you're trying to learn, because then you just won't get started. Right. So you'll never understand 150% of the deal, but you got to get started.
Right. So you got to take action. But what I'm saying is some people are just irresponsible. They go to a seminar, a networking event. They don't join the mentoring program. They meet some guy in the hallway. The guy shows them a deal and everything looks amazing on paper. And the guy or the gal seems like a nice enough person, but you have no idea what this is. It just looks like, hey, this looks great. And they look like nice people with a lot of experience and they invest. And that's a recipe for failure.
Yep.
So there's a certain amount of basic fundamental education that I would recommend somebody has. And Adrian, to your point, I'm not recommending like hundreds and hundreds of hours or years of education, because there are some people that I would call seminar junkies, and they just, some people are like, well, Brad, I'm brand new to this. I've been studying for 3 years, but I haven't pulled the trigger yet. Don't be that person.
Yeah.
And so, what I'm able to do, Adrian, and you experience this, I'm able to take something that seems complicated and break it down into some simple steps that, people could learn the basics in a relatively short amount of time, which is why I do a 3-day event and I teach that framework. So, once you understand it, now you're ready to start finding and analyzing deals. And so whether you're going to be a passive investor or a general partner or do your own deals with your own money, you need to find deals, or if a passive investor, you need to find the people that have the deals. And so, if you're a passive investor, you're going to go and find people that are doing the deals and get to know, like, and trust them, and then invest in their deals, the ones that meet your criteria. But if you're going to go out and do the deals yourself, you need to get deal flow. So, I teach, like, where do you get deals? Do you get them online? Do you get them from brokers? Do you get them from owners? Do we do direct mail campaigns? So I talk about all that. And I talk about, depending on what your goals are, and whether it's a 4 unit, a 40 unit, or a 400 unit, where do you go to get the deals? And then once you get them, you got to analyze them. And I teach a very quick and easy way to analyze a deal that anybody could do. Like, I could teach you how to analyze a deal in 60 seconds. And then I'll show you a more thorough way to analyze a deal using, like, a 5-year cash flow analysis. So I teach that. Okay, so now we understand what we're doing. We get deal flow, we find deals, or we find the people that are doing the deals, and we analyze them. Well, after you analyze them, the next step is, and again, this is key, because I've had students that I've mentored and that have paid me tens of thousands of dollars, and they become experts in analyzing deals. But some of them have also become experts in analysis paralysis, and they overanalyze and they never pull the trigger. And I'm like, look, you didn't pay me tens of thousands of dollars so you could become a master property underwriter and never own anything. Yeah. Right. And, so, like, you gotta, again, there's a balance between education and action, and just being educated and not taking action does not lead to success. So you understand what you're doing, you find and analyze the deals, and now you gotta, make the offers, and you gotta negotiate the deals, and you gotta do your due diligence, your inspections, get your loan, get your insurance. There's all the things you got to do to get the deal closed. And I teach that as part of my framework. And I teach funding the deal. So you need to get the debt, you need to get the equity. So look, this is all part of my framework. It's understand it, find and analyze it, fund it, close it. And then once you close it, that sometimes, and most often than not, it takes a lot of work to get the deal closed, but you can't take the foot off the gas, because now the real work starts, where you got to manage it, work with your management company, or if you buy a smaller deal, be the management company and implement the business plan, the capital improvement plan, the asset management plan, until you're ready to exit and profit from it. And so that's the framework that I teach. And I've been doing this for 22 years on every deal I've ever bought. And I've been able to teach it to people like you, Adrian, that, didn't have multifamily experience. And I was able to, like, simply and effectively transfer this information so that you could go out and control 1,400 units in a relatively short period of time. And I've done that with hundreds of other people.
Yeah. Yeah. No, it's amazing. You have this saying, it's called ready, fire, aim. It's actually on my, oh no, it's not on my coffee mug, but you have this framework as well on ready, fire, aim. I think that backs up, a lot of your points that you mentioned earlier is, learn what you can learn, and then put yourself in the rooms, take some action, and then you start aiming later, right, on where you want to go. So I really like that. And I think, so you talked about understanding the deal. You talked about, making sure to screen, the people you're going to be investing with, making sure you understand the market, right? I think that's another important thing, is you got to understand the market, where the deal is located. So really understanding and then finding the deal. So let's talk more about finding the deal. Where should people be looking right now? And how have you done it, to find the deals you've bought? You've bought over 8,000 units. You've raised a bunch of money. So where were you finding these deals in the beginning? And then where are you finding them now?
Well, look, there's different ways to find the deals. And Adrian, as you know, but I want everybody else here to get clear. I specialize in helping people doing 60 units and up, not 16, not six, but 60. That's 60. And so, if someone said, let me move out of that for a minute. If someone said, hey, Brad, I want a sixplex, I'm going to tell you to go on MLS, the multiple listing service, which is the service that people use to find, houses that they want to live in. Even if you wanted to buy it, maybe up to a 10 unit, you might go to MLS. You might do direct mail, and approach owners directly. I don't do that. That's not the business that I'm in. The smallest property I ever owned was 32 units. And so for those listening out there, if you want to learn how to cut through and skip over this step of doing 2, 4, 6, 8, 10, 12 unit properties and move into 30, 50, 60, 80, 100 unit properties. Some of my students, Adrian, and you know this, their first transaction was 180 unit syndication. That was Emily and Adam Roberts, Emily Courtwright and Adam Roberts. Tawheed Siddiqui's first investment property in multifamily was a 300 plus unit. So, and they started with no previous experience. So those properties are almost entirely sold from one source, and it makes it very simple. And that one source is, take a guess. Whoever's listening, type in, and you can type it in on Instagram or type it in the Zoom chat. If you're buying 50 units and up, what is the best source for finding deals? I'd like to see what people think about that before I give the answer.
Yeah. So where can you be finding deals right now? Large deals.
Okay, I see one comment on Instagram.
Brokers.
Yeah. Anyone else? I don't see any comments on Zoom, and I can't see what's happening on Facebook Live.
Yeah.
Okay. But, well, let me give you the answer. Tawny Bing Pong 01 hit the nail on the head on Instagram Live. It's brokers. Okay, so what I teach, Adrian, is this exactly my experience, and I've been doing this 22 years. You pick a market, say DFW or Tampa or Houston or San Antonio or Nashville or whatever market you want to specialize in, and you become familiar with that market, and you find the brokers that handle multifamily properties in that size range, and you get to know them, and they will send you deals. That's it. It's as simple as that. You got to get to know them. They have to view you as educated, as credible. That's why this step one in the framework, understand the deal, was so important, because if you just go to them and they have a 60 unit deal for $5 million and you just, make an offer or want to tour the property and they haven't qualified you, like they want to know that you know what you're doing. Like, do you understand this business? Do you know that you need $1 million down? Are you going to be able to get a $4 million loan? How are you going to close this transaction? The broker's thinking that from the very first point of contact. And so if you're unsophisticated or uneducated, they won't give you the time of day. Okay. And so getting that step one of the framework, understanding the deal, that's the first part of what I teach in my programs and in my 3-day conferences, is understand it. And then I start talking about how to find them and its relationships with brokers. And I could go, and spend an hour on that, which I can't today, but I do in my trainings.
Yeah. Yeah. No, thanks for that, Brad. And that's another reason why you guys want to be in a program like Brad's, because they already have the relationship and the credibility with these brokers in certain markets. Right. So if you tell them, hey, I'm a student, and I know that that's happened multiple times. I know you've also, jumped on calls with brokers for your students to just, pass through that credibility. Right. So you guys, these brokers are going to require you to know what you're doing, and you don't want to burn yourself in the beginning. And I would suggest to start meeting with these brokers, over coffee, and to make sure that you have, a company credibility packet, and you start lining up your key principles, because in this business, you guys, might not be able to sign on loans. You guys might be able to, fully raise all the money or be liquid enough to be able to do the deal. So you guys need to build your team to make sure that you're ready for when the broker does send you a deal, because you don't want to burn those relationships, and it's super, super important. So I think that's golden advice, Brad. And where can you find these brokers? Where would you suggest these people to find the brokers?
Well, like, look, initially you could go online and you could type, San Antonio multifamily, brokers.
Yep.
You could go on LoopNet. And I know people are like, oh, there's no good deals on LoopNet, but it's free. It's owned by CoStar, which is the same company that owns apartments.com. So they have tons of industry data and tons of deals for sale. And a lot of times there'll be deals for sale on LoopNet, but even better than the deals that are for sale, you'll find brokers that are selling the deals. So like when I started, I would look on LoopNet and I'd see a deal and I'd be like, yeah, I don't like that deal, or it's not a good deal. But I would start relating with the broker and I would start telling the broker, hey, here's what I'm looking for. Hey, I'm not interested in the deal you have on LoopNet, but let me share with you what I am interested in. 60 units, Class B, San Antonio, value added opportunity, i.e. meat on the bone. And then these brokers will go to work for you and start sending you stuff, because they are only paid if you close a deal.
Yeah. And that you hit another key point there, and not saying, when you speak with these brokers, just, saying, send me anything you got. I buy everything and anything. I think it's so important to figure out your ideal type of property and have that criteria, because the brokers will be able to know that you're legit if you at least have that criteria, and not just say, send me anything you got in whatever state. And another thing that I did, when it comes to brokers, is maybe sometimes the brokers that are doing, all the deals, that are very famous brokers in that market, maybe they might not give you all the time, especially when you're starting off, but maybe their assistants, or maybe, someone else in their brokerage, who just started with the brokerage, or, one of their right-hand people. So if the main broker isn't giving you the time and attention, especially when you're starting off, you can also go with somebody else within that same brokerage. That way you can, start getting deals from them. So finding the deal, you covered that. So funding the deal, right? It's not always about finding it. You also got to fund it, and you got to build your investor database, and you have to have, the credibility. You have to be putting yourself out there through, webinars and, LinkedIn, and, just going to events. And so what would you say on funding the deal, some more tactical ways for people to understand how to fund the deal?
Well, let's talk about funding the deal. So there's a few ways you could fund it. You could either fund it yourself, or you could get other people to fund it with you. Or like in our case, both of our cases, we do both. We put in some of our own money, and then we give other people the opportunity to co-invest with us. So let's just break this down. Like, look, if you're going to buy a property for $500,000, and let's just use 30% down. It used to be 20, and now it's probably 40, because the capital markets have changed with the rise of interest rates and stuff like that. But let's just pick 30% as a historical midpoint. Okay. Again, just to be clear, I'm not saying it's 30% down now. It could range between 20 and 40%. But if you're buying something for $500,000, 30% is 150 grand. But if you're buying something for $5 million, 30% is 1.5 million. So, so like most people don't have 1.5 million just sitting in their bank account. You probably do, Adrian, but most people don't.
I don't know about that one.
So look, this is why people start small and stay small. They're like, oh, I'm going to go buy that $80,000 rental home or that $100,000 duplex because they have the 30%, or the 20%. But what they don't have is they don't have scale. They don't have professional management. And so, they might be able to buy a single family rental or a duplex or a fourplex, but they don't have scale. They can't really run it as a business. It becomes more of a job. And if you're listening and you find yourself going to your properties all the time, collecting the rents, processing the evictions, doing the make readies, going to Home Depot on evenings and weekends. Like that's not scalable because there's only one of you. And that's why I'm very bullish on let's skip those and let's go into that $5 million property. But now you need $1.5 million. And so, yeah, so where do you get it if you don't have it? Well, this is where now you're not only learning about understanding the deal and the fundamentals of the real estate piece, now you're also learning about how do I go and talk to people? How do I raise money legally? How do I, what does the SEC, the Securities and Exchange Commission have to do with this? How do I build a network of potential investors? Some people do it by going to events and getting to know people. Some do it by having a strong social media presence. Some people do both. Some people do neither of those, but they get to know like 10 family offices, which family offices are, families that run hundreds of millions of dollars of investor funds. And so whether you have 10 investors that each put in $1 million or 100 investors or 1,000 investors that put in 100,000, those are different ways to do it. And I know people that do all of those ways. And like, Grant Cardone is a very well-known guy and he raises, gazillions of dollars of money on social media. Yeah. And another one of my friends that I'm not going to mention, he's not on social media at all. And he raises gazillions of money as well. Adrian, you know who he is because he comes to our mastermind events as a guest instructor, but he has no social media presence, but he's got 20 or 30 like really, really high net worth, family offices that put millions of dollars into his deals.
Yeah. Yeah. And I mean, I think it's really where you choose to pursue this realm to, raise money. That's important, right? Because there's not just one way that works. I do get asked a lot, where to look for the money, what worked for you, but what worked for me might not work for other people,
Yeah.
And so raising the money, I also think I want to touch on how it's so important. If there's one thing that I would have done differently is I would have been raising throughout, my entire time in the business. I think a lot of people make the mistake of focusing on raising money after they get the deal or once they're looking at a deal.
Yeah, you're
always,
done.
Yeah.
If all you do is go find deals and analyze deals and make the offer, and now you win a $5 million deal, and you haven't equally been out there going to conferences, joining investor groups, going to seminars, getting to meet people, building up a list of potential investors that know, like, and trust you, you won't raise the $1.5 million unless you have like a really good friend or family member that's going to fund. Like, it's possible that you might have one investor that would give you $1 million or $1.5 million. But for most of us, including me, that's not the case.
Yeah. And I think, I've also had people say, well, I have this one guy, I don't need to be raising more money because I have this one or two guys that are going to put all the money, no worries. And most of the time that's not going to be the case. Those guys are not probably going to invest with you on your first couple deals. So you don't want to rely on 1, 2, 3.
Yeah.
4.
And if they do, they're going to take over the entire deal and you'll end up being there,
yeah.
Yeah.
Yeah. And I mean, I also suggest to start building your database. The money is going to be in the database. If you go to events, you get business cards, you get their name, email, and then you put more or less how much they'd be ready to invest, right? And so you want to build your spreadsheet as you're looking for deals, as you're looking for partners, and as you're going to events.
Yeah.
This is so important. That's a key piece. You can't do a deal without raising the money. And there's a lot of money at stake too, right? You got to put up a bunch of risk capital. You put up good faith deposits with lenders. There's a lot of money that goes hard when you go into a deal. And if you don't have the investors ready to come into your deal, then you're putting yourself at a huge risk. So you want to make sure you're always building your database, going to new events, and making sure that you're putting yourself out there in social media too. Brad, I mean, on some of my deals, I've had people message me on Instagram saying, hey, I want to invest with you. I've been watching your stuff for the last 2 years. I haven't been ready for the last 2 years, but now I'm ready. And they'll invest $500,000. 600,000. So guys, you never know who's watching, but you have to be putting yourself out there. You have to be promoting what you're doing. If you're at a property, walking a property, put out there, hey, touring this 200 unit deal. We're looking to, buy it. We're looking to structure it. And then people will start messaging you and people will start really knowing who you are and what you do. And you never know who's watching. So make sure you guys are always promoting that you're in the business. So
Yeah,
funding the deal.
I love it.
Yeah. So funding the deal. We covered a little bit about that. Is anything else you want to talk about on funding the deal, Brad?
I mean, hey, look, I could go on and on and on, but let's,
Let's keep going.
yeah,
Yeah, for sure.
look, what the big picture that people need to understand is there's debt. And so you go to the lender for the debt, but the lender's only going to give you, 60, 70% of the deal, sometimes 80, but not in today's environment. It's going to be more like 60%. And then the equity, which is the down payment, is going to be the balance of that. And so again, this is why most people stay small, because they might be like, hey, I got 50 grand, I got 100 grand. Like, how am I ever going to buy like a $5 million property? I don't have the money. And so, but you know what? It's the same people that will go to work 8, 9, 10 hours a day for years for somebody else, but they won't go to work, 8 hours a week to build up a database. Like, it doesn't take 8 hours a day to build up a database. Like, you could spend 8 hours a week going to conferences, seminars, invest in yourself by spending time in those right rooms and build up a personal brand. And that will, have an amazing ROI on your ability to, win investors.
Sure. Yeah. And some other ways too, I think a lot of people are looking at only real estate rooms or real estate people who know about real estate, but sometimes people who invest in these deals, they have no idea. They're not in real estate rooms. Maybe they're in yacht clubs, maybe they're in, private plane clubs, maybe, they're at different places that are not real estate related. So don't limit yourself to only real estate related investors. There's people who, need this platform, who, make money in other ways. So
yeah.
Funding the deal is super important. You won't be able to buy it without the money. So make sure you're building your database and, while you're finding deals and structuring deals, then, you close the deal, right? You got to look at your management company. You got to look at, who's going to be the asset managers. You got to look at, how you can structure it, right? The legal aspect of it. So there's a lot that goes through closing the deal and then executing. So Brad, you want to touch a little on the closing process and what people need to be looking for to make sure they have success?
Look, there's a whole list of things we need to do to get to the finish line of a closing. And it's like, so after you fund it, you find it, analyze it, and get it funded. Well, even if you have the debt and the equity, you want to have a property management company, you have property insurance, you want to have your inspections done, you want to do your capital improvement budget. You want to, like, the day you close, you want to hit the ground running. Yeah. So, what I teach is all the different things that need to happen for a successful closing. You should have your whole team of what I call service providers, like, ready to go. Attorneys, tax professionals, company agreements, vendors, landscapers. And look, the thing I love about when I hire a property management company is they have their own Rolodex of, contractors. So, as an owner, we could always suggest or tell our property management company, hey, I want you to use this contractor, or at least consider them, or see if they're competitive. And so that's one thing we get to do. And when you hire a property management company, they already have their own list of people they work with, which is another benefit of hiring these property management companies. So yeah, there's a lot of things to do. And I teach that in my framework.
Yeah. Yeah. And when it comes to the value add apartment complexes, you have to put together the business plan, right? The lenders are going to ask you for the business plan. Your investors are going to ask you, you have a certain amount of money that you have to put into the property to execute and to deploy to be able to improve it over time, right? And typically these are done within, the first year, 2 years when you own the apartment building. So you need to prepare for that as well, right? The business plan, you got to hit the ground running. Like you said, you got to choose which units you're going to be remodeling. Maybe there's some vacant units already that, you guys can start, buying materials for once you close. Have the contractors scheduled out, because, maybe some of these contractors are going to be busy, so you want to make sure you guys plan accordingly to be able to execute on your business plan day one. And that's why we started our own property management company. We're vertically integrated because, we just felt that we could kind of take a little bit more control and be able to control the deal and the business plan after. So, but, hiring third-party management companies also works. There's multiple people, that hire these third parties, and they really help them get to success. So, understanding the deal, finding the deal, funding the deal, and closing the deal. Those are all, the 4 important steps to be able to be successful in this business. And, there's a lot more that goes to, behind all of this. And that's why you guys need to educate yourself. People ask me, what's the first thing that you would recommend I do? And I think it's educate yourself. And so you got to be putting yourself in the room, right? And Brad has, R2R. He's been having this event for multiple years. I'm not sure when you started R2R, Brad, but I know it's been a long time. And
Well,
yeah,
it was 2013. And what is R2R? It's the name of my conference, and R2R stands for Rat Race to Retirement. And why do I call it that? Because that was my personal journey. I was in corporate rat race for 17 years, and I retired in 3 years after investing in apartments. And so what is Rat Race to Retirement? It's a 3-day conference. What does it do? I teach you the step-by-step framework, the system that was summarized today with me and Adrian. Understand the deal, find the deal, fund the deal, and close and manage the deal. That's what I teach. And the thing is, it's not static. It just keeps getting better and better because I've been doing it for 22 years, and I'm committed to growing and learning. So look, the fundamental steps of the framework are the same, but it keeps getting better and better as the market ebbs and flows, as we go through different market cycles and get different types of debt and have different types of experiences. And so what I'm going to teach at the end of April is a lot of the same as what I taught before, but it's a lot different because we're in different times and we have new experiences. It's kind of like a doctor that says, hey, I practice medicine, or a lawyer that says, hey, I practice law. Why? Because it's a constantly evolving industry. Okay. What's happened in the last year or two never happened. The Fed never raised interest rates so high, so fast, ever in history. And so we have learnings from that. Okay. And would be irresponsible not to talk about those learnings. And what happened what happened during the pandemic when rents went up 40%, we have learnings from that. Yep. So the framework that I teach, the system that I teach, it's the same. And it's also evolves as the market changes. So it's never the same event, So what does that mean? It means that, you come to a 3-day event, you learn the exact steps that I'm doing right now and that I've taught to people like Adrian and hundreds of other people. And what does it do for you? What it does for you is you're not on your own. You're not guessing. You're not wondering what do I need to do, or how do I need to do it, or what steps should I need to take? It's a sequence of events that anybody could learn that comes in with an open mind. And that's what the event is all about. So I only do this specific event one time a year, and it's happening later this month in April in Dallas, Texas.
Yeah, thanks for that, Brad. So guys, April 26, 27, and 28 in Dallas, Texas. Brad's going to be going over for 3 days, guys, 3 days. And it's only a couple $100. I mean, it's really not anything to break the bank. You guys will be doing yourself a disservice if you don't attend an event like this, coming from someone who's done deals to learn from, and to also be around that peer group, right? You mentioned that there's some, uncertainty in the market, and some, the last 2 years in the business has been, ups and downs. So, learning from people who are doing deals and getting advice from them is super important, especially if you're starting off. So guys, do yourself a favor, go onto his site. I will be sending everybody a discount code that I have, and to make sure you can sign up, online. It's going to be in Dallas, 26, 27, 28 in April, and it's only a couple $100. Those are probably I got the most ROI from your event in 2016 by paying those couple $100. I mean, now because I paid those $100 and I went, and you even do a tour, an apartment tour, you go out live on the field, and you go and you bring your students out there, people in the event, and you show them what you look for. You show them, strategies, and even you bring up the people who structured the deal to talk and to share, what they learned from it and what they, could have done better. Right. So you guys will be learning from people on site who are doing deals at this event.
Yeah. And let me say something else. So that the bus tour day is for the platinum ticket holders. So if you want to have a day where we're looking at properties that I own and my students in Dallas own, you want to invest in the platinum ticket. And here's the other thing, and I've done this before, but I'm not doing it at this event. I've had celebrity speakers. I've had Grant Cardone, I've had Robert Kiyosaki, I've had Jesse Itzler, I've had Ed Milet. And here's the thing, right now where we are in this market cycle, we need to know the basic fundamentals. And so this event is not about celebrity speakers. The only people that will be speaking will be teaching actionable content in the areas of multifamily. So not only am I going to be there, Tom Wheelwright, my CPA, is going to be there, who's also Kiyosaki's CPA, and he's going to be teaching you how you could save on tax. And then Robert Helms is going to be there, my good friend that runs a really popular real estate podcast and has international investments. And he's going to be teaching his view of the state of the market, the state of syndication and the opportunity that he sees right now. So it's basically 3 days of content, of actionable content. So it's not going to be, having Navy SEALs on stage doing push-ups. I'm sorry, there's a time and the place for that, but that's not happening at my event in April.
Yeah, no, guys, you don't want to miss it. Thanks a lot for that, Brad. And, it's been a huge reason why I'm successful in the business, why my business partner is successful in the business, is because we attended one of your events and started learning from people doing it, and those in Texas, he's not that far away. It's in Dallas. You guys won't regret that trip out there. And like I said, Brad's also learning from the best. So you guys, if you don't have the money to pay, for huge programs, people who are really successful, then you want to make sure that you learn from people who are in those programs. And Brad will be sharing some valuable nuggets, valuable advice for those who are looking to get started in apartment investing. Now, Brad, one question that we got from the audience that I want you to answer before we head out is, so it's about raising money. So there's someone who asked how you get in front of big investors and how to put yourself in the position to raise the money from them, even if you're starting off. You mentioned, you buy a big apartment complex, a $5 million deal. You got to raise $1.5 million. So some people raise it by $50,000 investors each, but some people might just bring in one or two big investors. So, this question came from somebody who's more interested in learning how to attract these bigger investors. So what's some advice you would give this person who is interested in targeting larger investors for their deals?
Well, to me, it's really simple. If you're going to, I'm just going to repeat this question because, Adrian, it's a really, it's a clear distinction that needs to be made. Some people will raise $1.5 million from, if people put in 100,000, they would need 15. So to do 1.5 million, you need 30 people at 50,000. And so the best way to do that is you go to conferences and join investor groups and you put yourself in front of hundreds of people at networking events. But the opposite might be, hey, I want to have 3 people invest 500,000 to get the same 1.5 million. And to me, it occurs to me that you're going to need to be even more educated. You're going to go into people and want to ask them to put 500,000, $1 million into a deal, and you're new. I'm not saying you can't do it. You can do it, but you better have an experienced team around you. You better be able to say, hey, this is my mentor. My mentor's been doing this for 22 years. This is my lender. My lender has originated $1 billion in loans. This is my management company. They manage X number of properties. This is my team. This is my accountant. This is my attorney. Like, you will have credibility by the people that you've associated with, and you'll be more confident to go to these higher net worth people, and they will be more confident to invest with you.
Yeah, no, amazing. So guys, make sure you, at the end of the day, you guys got to get educated, one way or another. So, again, Brad, thanks for coming on. I know your time is extremely valuable, so we appreciate you coming on. And we will see you at the end of April at R to R, April 26, 27, 28. And I will be sending everybody a link to be able to sign up to his event. I will also be giving a couple free tickets to people in the audience. We do have our team checking who's live and who's stuck with us through the end. So I will be giving away a few tickets,
I
as
love
well
it.
as a 1 hour free personal consultation done by myself. I will jump on and answer any questions you guys may have. So, Brad, thanks a lot for coming on. We appreciate you, and we'll see you at the end of the month.
All right. Thank you. And thank you, everybody.